So yeah, people will abandon the positive leverage requirement for a few reasons. One, they will get more optimistic, they'll get more aggressive, and so they'll be more willing to invest on compressed spreads. And number two, it's more appropriate or more palatable to invest in on less positive leverage or negative leverage when rent growth is higher, because it's very simple. If you might be buying at negative leverage today, which means a lower cap rate, but if rent growth is high and persistent, then you're going to quickly grow revenue to the point of having positive leverage. So over the last couple of years, we've had flat essentially to negative rent growth, which makes a lot of sense. Why? If you wanted to buy a deal a couple of years ago, you probably wanted positive leverage because you weren't going to go from negative to positive anytime soon. But when we hit that point of the market when all the supply has been built and absorbed, and now we're talking about a dearth of supply, and now we're talking about undersupply, and everyone's talking about how we have a housing shortage in America and how rents are
If
going
I had
up.
a dollar for every time I heard there's a housing shortage in this country, I would be our best LP. And that's saying something.
Well, people will talking about it more very soon, and when that happens, around, depending on the market, 2026 or so, there's going to be rent growth, and therefore people are going to be more willing to kind of skip out on the positive leverage requirement.